I think it's absolutely moronic that there's an ETF that's based off futures before an ETF based off spot. And to claim that that's for like investor protections is just asinine, because if it's based off futures, the volatility is going to be way, or not the immediate volatility, but the implied or possible volatility can be just asinine. You have to consider, like, with regards to, and this goes back to real estate, stock market, equities, bonds, whatever, talking about how weighed down the US is specifically with chronic metabolic syndrome from like the 90s up into like 2011 or 2017, somewhere around that area. I probably fudged up the time frame a little bit. Healthcare premiums went up by nearly 500%. We can't not afford to talk about the health problem. I don't think we've gone as low as we're gonna go. So like when you get like big macro developments like this, not only does it take time for them to actually set in, but then it also takes time for the market to like kind of realize it.
Hey everyone, thanks for watching this episode. If you enjoyed this episode, make sure you like and comment below. And to find future episodes in your feed and push notifications, make sure you subscribe. And if you click the little bell, you'll get every new episode as it's released. Thanks again for watching. Today I'm sitting down with Mike Hobart. Mike Hobart is prior military Army aviation who later attended the University of Northern Iowa and received a Bachelor of Arts in Exercise and Movement Sciences. And most importantly, Mike is a Bitcoin pleb. More recently, Mike joined Great American Mining as the Communications and Marketing Manager. Great American Mining is a Bitcoin mining company that specializes in deploying Bitcoin hash rate to assist gas flaring on American oil fields to help reduce environmental impact while maximizing investment returns and incentivizing greater oil production. So without further ado, let's dive in with the one and only Mike Hobart. Hey guys, I'm going to take a quick pause to introduce the first sponsor on the Jay Gould Show. I am happy and proud to say that this show is now sponsored by WITHUM Smith & Brown, which is a forward-thinking, technology-driven advisory and accounting firm that is committed to helping big and small companies be more profitable, efficient, and productive in today's complex business environment. WITHUM now also has a dedicated crypto and blockchain technology team to help early-stage businesses properly navigate all the crypto tax-related matters. I've been using WITHUM both personally and professionally for nearly a decade for all of my business's personal needs as well. I'm very happy with them and I highly recommend WITHUM. You can contact WITHUM by visiting their website at withum.com. Now back to the show. Mike, welcome to the show.
Thanks, man. Looking forward to it.
All right, bro. Let's start off. First of all, for those that don't know, we did a whole recording and like the first minute or two didn't record and it screwed up the whole interview and I don't even know. So we're doing it again. All right, let's talk about your new gig, right? So you are the the communications and marketing manager for Great American Mining, which after we talked, I realized, and I went to like the Crunchbase, that Todd Garland is the CEO and the founder. And he's from the industry that I was in my last company, which was ad tech, right?
Yeah. Nice.
Pretty cool.
He gave me a brief history, and I didn't like connect those two dots. Like once you did that, I was like, oh, I probably should have identified that almost immediately. But yeah,
well, I mean, how would you have known that? But it was funny because like you just kept saying Todd, like whatever, you know. And then when I went to the Crunchbase, I was just curious to see how much they've raised and all this kind of stuff. And it's kind of a bootstrap business, like all of his companies have been. He's a great founder. He's actually done a really good job in the various different companies that he's had. I've kind of known about him, sort of. You hear the names in the industry, right? So I've kind of known about him. And when I saw that name, I was like, I think you're in good hands. He's a pretty good founder, man.
I'm without talking about like the inner workings of the company necessarily. Like the more I've been telling him over the last couple of weeks, since I started the position, that like the more I learn about the team that he's assembled and what they're building here, I keep getting more and more excited because, as far as I understand, there's nobody else in the industry that is working on particularly what Great American Mining is working on. And like they're working on really more like just to kind of plug them, since it's basically my job now, right? But they're working on building out a kind of like a mobile and adaptable mining solution. And right now the big one is oil and gas, because they can help with natural gas flaring. Particularly out in North Dakota on the back end, which is where like the big headline, what was it, last month now? Yeah. beginning of April. ExxonMobil and ConocoPhillips being pretty aggressive, getting into Bitcoin mining. So that's super super exciting. And the big thing is that there's a lot of focus on oil and gas because of that, but companies like Great American Mining aren't necessarily limited to just oil and gas, right? And one thing that I tweeted out this morning from the Great American Mining account was, so there was a report that came out that Iowa and Kansas, I believe over the course of 2021, I have to double check on the article, which I believe I actually have up right here real quick if I can check. Through 2011 and up to 2020, they had grown their wind and particularly their wind energy production by 30% between Iowa and Kansas. And the crazy part there, or with any renewable really, is because of the nature that they are intermittent in both supply and demand. Because the energy market in general is really pretty intermittent. Like there's kind of peaks and troughs between like morning, noon, and evening. And then also there's fluctuation between the seasons for obvious reasons, between like summer demanding air conditioning and winter demanding heat. Those energy producers that are relying on such an intermittent source, it would probably behoove them to have something like Bitcoin mining incorporated to help kind of like balance, like do the load balancing between which Sean Connell did a great podcast with Peter McCormick talking about the financials of all that load balancing. So I'm needless to say, I'm super excited to be here. Like I've never been, and this is not like trying to blow smoke up Great American Mining's ass or anything like that, but I've never been as excited about a job as I am right now, and especially because of the fact that it's directly related with Bitcoin.
Yeah, like I said, I know that he's a pretty good founder. It's interesting that I see a lot of people in ad tech have moved over to Bitcoin. I think there's some similarities, as you just mentioned, the terminology of load balancing. Well, yeah, that too, network effects, but also just kind of like in the mining space, it reminds me of like the web hosting space. And when you're an ad server or an ad technology company, it's very related in many different ways on how you build those businesses and how it all works.
There's going to be a lot of just like load balancing and energy balancing dynamics that are going to be like and that I think that that's going to be a trend just going forward because of how much more important technology gets every single year as far as like every single industry across the globe.
Okay, we are recording today on May 3rd, 2022. And I say that because last night, this is crazy, right? Last night, a Supreme Court draft opinion that would overturn Roe v. Wade was leaked. And it's actually my understanding that no draft decision has ever been leaked in modern history. I don't think so. Disclosed publicly while a case is still pending. This is the first time. It's kind of unprecedented, actually. But interestingly, Mike, according to CNN, President Biden, since he's taken office in the last couple of years, he has not publicly said the word abortion once, okay? And yet this morning, President Biden released a statement and he mentioned the word abortion, right? So it just, among other things, he said this. He said, if the court does overturn Roe, it will fall on our nation's elected officials at all levels of government to protect the woman's right to choose, and it will fall on voters to elect pro-choice officials this November. And at the federal level, if we need more pro-choice senators and pro-choice majority in the House to adopt legislation that codifies Roe, which is what I will do to pass, I will pass and sign those into law. Look, this is political. I was supposed to have, as you know, Bruce Fenton on today, who's running for Senate. So this is one of the topics I want to talk to him about. You and I are not politicians, right? But I'm just curious, as a Bitcoiner, where do you stand on this anyway? Not this necessarily this stance. I mean, you could certainly share that if you like, but like, where do you stand in terms of like government's involvement in any of this kind of stuff?
I'm going to be, because I'm generally, and you know this, I'm generally like political agnostic. I'm very much like a centrist almost, you could say, but I'm going to have to take the more kind of like libertarian side of it in the sense of I don't think government has any right being involved with any sort of decision making on that level. That's something as far as like the individual and the individual's family and who's directly involved. Like that's a decision for them to make. I
gotta tell you, I was on Clubhouse last night. They were all yelling and screaming at each other. It was crazy. People get riled up over this stuff.
I
I
bet.
just jumped off. I was like, I'm not getting into that crap.
Well, and then there's because I mean that's particularly why that debate is particularly for like the family environment, because everybody is going to have a very aggressive differing stance on it. And that's going to be to the point you were making.
Politically motivated, religiously motivated, morally motivated. There's a lot of things going on as it relates to it.
As far as like murder, like if anybody like counts it as that, right?
Yeah, like how do you determine? And then, by the way, we live in a world today where science is kind of thrown out the window, and there's like fake news and realities that are not necessarily shared beliefs amongst most majority of people per se, and depending on what the topic is, not to say what those things are, right? But there's a lot of weird stuff happening over the last 5 to 10 years, and increasingly getting more and more divided and polarized. And a topic like this just comes out of nowhere, like bang, and just hits everybody in the middle of an election process coming up in November. It's kind of crazy.
So that particularly, I actually wanted to touch on that because I was thinking about it this morning as far as like the game theory goes, because now I'm not getting all conspiratorial here, but in the last like 3 years, specifically in the last 3 years, if your viewers or like people in general haven't noticed that, like when something like this comes out, what like regardless of the headline, whenever a headline comes out, there's a reason for it. There's
well, it's the first time it's ever been leaked in the middle of it. I mean, it's crazy actually. So how did that happen? Why did that happen? Who did that?
So then like the general question that I was asking myself is, okay, if there had to be a reason for this, what would the reason be? And right now, Democrats are not looking great as far as midterms in the next election goes. Like across the board, it sounds like they're going to lose control of the Senate and the presidency. From what I've been seeing. Now, if that's true, that means that Republicans are in a relative position of comfort, in my opinion, a relative position of comfort and power at the moment, or at least they were until last night, because if Republicans were to want to like push something like this, which it kind of comes off as very Republican charged, if Republicans, in my opinion, were wanting to do this, they would have saved it 12 to 18 months into the year of winning the Republican presidency. Because at that point, like once you get that far into a presidency, we saw it with Trump and like we saw it with Biden too. Like once you get that far in, people's animosity and emotions kind of have enough time to wane and like die off a little bit. So if you're going to push something that's controversial,
rile them all up again.
It's not gonna light up a gasoline fire. It's gonna be more like a bonfire made of timber. But now, so if that's the case, then Republicans shouldn't have wanted to do this. So then what I start to ask is, okay, is there an incentive for Democrats to like motivate or help push this into happening? Because Democrats are not only losing, but they're completely fractured from the way I see things. Like they're not united on any front. Like they don't necessarily know what they're doing. And again, to reiterate, I'm not politically aligned with either side. Like I think they're all idiots, to be completely fair.
I tell my dad this shit all the time. We talk about like the politics sometimes, and I hate talking about politics. And he's definitely more of a centrist, but he leans left. I'm more of a centrist and I lean right, you know? So I tell him, I'm like, I think they're both crooks and they're all just out for one thing: control. Both of sides. They're just doing it in different ways, whether it's taxes on the left or whatever on the right. Like, I don't want to say what the option, you know, so we obviously know that Democrats want to increase taxes, right? But that's a form of control.
You know who's going to be riled up most by this, in my opinion, is going to be the metropolitan and urban women, because they tend to lean more liberal.
I will say John Seth was on last night, right? And he was giving all kinds of poll studies and stuff like that, which I don't have them off the top of my head, but like it was I was actually surprised. And he's like, you're surprised, Jay, because you live in a blue state and most of the people you know are liberals. And that's probably true, even though I live in a very Republican area. But it is true that there's a lot of, believe it or not, even the Republican conservatives here are very conflicted, because where I live, a lot of them are like, they work for government in some way, whether it's directly in the military. We have a few army bases out here, as you know, Fort Dix and some others, right?
A few.
There's quite a few. Fort Monmouth was one, they closed that down, as you know. But there's a few of those. All the police, there's tons of police, teachers, and they're all very pro their union, but not pro union. It's like they're Republicans, but it's like, guys, it's binary. It's you either believe in unions or you don't, right? Like you can't be like, well, mine's. Yeah, I like my union. Yeah, of course you do, because you like your pension. Right?
Well, and that gets into the echo chamber stuff, because I grew up in a union blue collar family, And I grew up like believing that unions were really, really good. And then I got my experience with it, like as far as like the politics of the upper echelon within my local union, and then kind of over the last few years for like research for quite a few of my articles for Bitcoin Magazine, I looked into the structuring and the problems with unions like across the nation. They're all corrupt. Like there's
no like my stepfather, right? Because I have two dads. My biological dad was a painter in the union down in Atlantic City, and my stepdad was he was a carpenter in the union up in northern part of Jersey, right? And central Jersey, I should say. And both of them are retired, and I can tell you the retirees get treated like shit in the unions, like for benefits and everything else. They like take from you more because they can't change certain things, but they can hit you on healthcare and like all this other stuff. And as we know, healthcare is rising dramatically, so they're just taking more and more out of their pay for that kind of stuff. And but they go with the masses, which are the people that are in work, that are currently working active versus versus those that are not, right? Because there's less of them, so they get shit on basically. And I don't know that it was always like that. I don't think it was always like that. I think it was like probably since 1971, right? Like ever since then, increasingly getting worse.
Or at
and
least
most people don't.
As tech started to really take off.
That's right. Yeah. The deflationary environment that's created and all this kind of stuff. Yeah. But I mean, most people don't understand any of the monetary policy stuff at all. So they just start blaming people based on issues such as this, the Roe v. Wade stuff, right? All these wedge issues are what's dividing the country. And it's very intentional by both sides. Both parties are doing that, in my opinion, because they know what the real problem is. It's the interest rates. It's it's the amount of money that's been printed. That's the real cause of all the problems. But nobody's talking about that because nobody's doing anything about it. They're all beneficiaries.
And they don't want to talk about it. And they don't want to do anything about it because those that are at the top that should be talking about it are the ones that are also closest to the money printer. So they benefit. So
Continuing effect. That's right. Yeah.
And and that's just creating like cascading levels of moats for them. Like they're not incentivized to bring forth that discussion.
Let me just read this last part on the Roe v. Wade thing. I just saw this on CNN earlier today. It says justices can and sometimes do change their votes as the draft opinions circulate, and the major decisions can be subject to multiple drafts and vote trading, right? Sometimes until just days before the decision is unveiled, this happens. The court's holding will not be final until it is published, likely in the next couple of months, which is very interesting to me because why was it released? Well, maybe it was released to persuade decisions. They're out there protesting in front of the Supreme Court today, right? There's usually that's not the case. You're like doing this stuff behind closed doors quietly. You're deliberating back and forth. Maybe they're trying to put some political pressure. Not, these are lifetime positions, but they are human beings, right?
They're trying to scare them.
Yeah.
Because it's just like the Federal Reserve with jawboning. They're trying to use the mob to try and influence policy.
How did that get leaked, though? I mean, it's the first time it's ever happened. It's crazy.
And like to that point, and then the point that I just said too is like we stated we're both not politicians, and I'm definitely not a lawyer. But if it can be proven, if it can be proven, in my opinion, that these kinds of things were done to try and weaponize the mob to actually steer policy decisions, I feel like there should probably be at least some sort of legal ramification for that.
I agree, man. And Trump was kind of saying that too, when everybody was leaking all this, that, and the other thing, and he kept saying like, "This is ridiculous," and I agreed with him on that, and everybody kind of did not,
Well, yeah, because Trump's like a case study in his own right, because like he could there were so many things that he did right, like you could just look at him as basically shaking his finger at NATO, being like, hey, you guys should probably not be so reliant on Russia, and now look where we are in the world. So there were points where he was in the right,
but his delivery just sucked.
His delivery sucked, and he was just so polarizing as an individual that people just
by the way, I say his delivery sucked, and a lot of people say if Trump would have just done this or that, and it's like, the reality is he did exactly what he should have done. He won the election as the president of the United States of America. How could we argue with anything that he's done was wrong? I mean, if you may not like it because you're on the other side of it, you may not like the way he acts because it's not traditional or conventional in some way, but it's why he won. So to tell somebody to change who's won, he might not have won if he was a different person and acted.
And now he's got a pension for the rest of his life, and he gets protected by Secret Service.
Yeah, he needs the pension. That's the one thing he probably doesn't need.
No,
Secret Service. He probably thinks that's pretty cool, and it probably is pretty cool.
Yeah.
Although it's probably also pretty invasive. Let's talk about the spot Bitcoin, the Bitcoin spot ETF, right? So the Bitcoin spot ETF. I was on Clubhouse a couple weeks ago, and everybody was debating over this one. Bitcoin Tina and some others were saying that they are glad that it hasn't been it hasn't been approved because, in their opinion, people should have Bitcoin, own Bitcoin, self custody Bitcoin, be self sovereign, and if you have a Bitcoin spot ETF, you're gonna have a third party custodial service, a bank of some sort that could own it. You could always lose it, it could be confiscated, all this kind of stuff. But they won't have true individual self sovereignty if they have a spot ETF. But I have a different view on this, actually, Mike, and I want to hear what you think. So there's like 100 million people, they estimate, that and or entities that have Bitcoin, right?
Yeah.
And there's like, I don't know, like almost 8 billion people on the planet, right? But there's about, I did this little research, quick kind of Google searches. I don't know how accurate this is, but it was about 2.5 billion people have a net worth of above $10,000. About 50, 60 million are millionaires, 1 million or more. 500 or 600 million is somewhere around 100,000 to a million. And then the rest are 10,000, which is like 2 billion something people, right? 10,000 to 100,000.
Yeah.
The reason I bring this up is that there's a very, very large concentration of wealth, as there is with normal wealth, right, at the top, right? And so out of the 8 billion people, only 2.5 billion people, I would say, are the target market that could own it. Most people are living paycheck to paycheck or have absolutely no money or anything like that in the world, right? As we both know,
Yeah.
which everybody always says, Bitcoin fixes this. Okay, but not for them now. It's right.
Yeah. I
They
mean,
can't
that's to be seen, right?
yeah,
Because
remains to
there's
be
no
seen,
way.
and maybe that's like this idealistic world of hyper Bitcoinization that happens sometime in the future, right?
Yeah.
But in the short term, they're not going to get their hands on it. They'll get their hands on it when it becomes a medium of exchange someday, because that's the thing that you've been using
Yeah.
potentially. But the point that I want to raise is that for those 2 billion plus people in the world that could own it, most of those people are the wealthiest people. And it's only 4%, 100 million out of the 2.5 billion people, right? It's about 4% that have it. The only way we're going to distribute out of their hands, in my opinion, is if the number goes up rapidly and then the future expected returns on Bitcoin start to decrease. So right now, if you think it's about $1 trillion asset and we think it's going to 100 to 200 trillion and the world's assets are at 500 trillion, it's somewhere around like 20% or so of the world's assets potential value in the future. Not accounting for, I'm saying today's dollars, right? Obviously,
Yeah.
everything inflates, and it'll rapidly inflate if this all starts happening. But take that aside for a second. Just look at today's dollars. So 100, you have about a 1 to 200x moving forward on this investment if you bought it, right?
Yeah.
Now, if it goes from like 40, 50,000 all the way up to like $1 million, right? The future expected return would be like maybe maybe $10 million per Bitcoin, right? So then you say, well, when you get there rapidly, then you have to have it over the next 20 or 30 years. So you look at the compounded annual growth rate at that point, and it's far less. And there are other opportunities that would compete against Bitcoin and do really well, like private investments in companies, real estate, whatever that might be, that could get, comparative kind of returns. And I think what happens is the very small minority of people that are holding it, the 4% of the 2.5 billion people, they'll start selling it to those people, and maybe they will have self-sovereignty, right? So how does that happen? You need the number to go up fast. And I'm not saying this is the only way, it's not a panacea, but I do think that if you have a spot ETF, it probably happens faster. Adoption happens faster in a shorter period of time. And then people could learn when they own it as it starts to proliferate to the people's hands and their brokerage accounts and their retirement accounts, like we just saw with Fidelity's 401k announcement. I think this is a good thing. A lot of the Bitcoin maximalists do not think it's a good thing. I just disagree. I'm just curious where you stand on that.
As far as like the good thing, just to
If
reiterate,
it were to happen, I'm sorry. If it were to happen,
like it's a good thing that it's not happened yet.
they think it's a good thing it's not happening yet. I think it should happen sooner than later, because I think it encourages people, as the number goes up faster in the short term, it over time, it'll get into more people's hands, because the people that own it are waiting for the expected returns of the future returns to be deminimized so that they could divest it into something else, right? Right now, it makes no sense. If you understand Bitcoin and you believe where it's going, which we just talked about, market cap of like 1 to 200 trillion out of a 500 trillion global asset size, why would you sell it, right? You're going to wait, right?
Yeah.
Most of the people are going to wait. So how do we get them to sell it to other people or entities, whatever, into the market? I think its number go up unless future returns, but maybe I'm wrong.
Well, yeah. And so, firstly, I just want to state that I think it's absolutely moronic that there's an ETF that's based off futures before an ETF based off spot. Like, that's just
Stupid.
that's like, And to claim that that's for like investor protections is just asinine, because if it's based off futures, the volatility is going to be or not the immediate volatility, but the implied or possible volatility can be
Sure.
just asinine.
Mm-hmm.
But as far as, I'm pretty torn, because while I understand why I don't want to say the mob, but it kind of is the mob as far as like the Bitcoin community in general, why they are happy that
It's
it's
very idealistic, they're thinking. Yeah.
yeah, it's idealistic, but I understand why, because as far as like not providing that doorway, not opening that doorway yet, is forcing quite a few people that do want to like gain exposure. They kind of have to learn as far as like self custody, and like they actually have to understand the technology, right? Like I get why people have that position, but I definitely agree with your position in the sense of like the Bitcoin itself, where it's custodied and who it's custodied with, is not going to distribute without number go up.
Yeah, I think that's right. That's pretty much my like NGU, right? It's all about NGU, and everybody's like,
And
not about NGU, and it's like, yeah, I get all the fundamentals and everything you're talking about, but like, how do you encourage the people who own it to sell it so they can get into other people's hands? And the only way to do that is the number has to go up.
that's Preston Pish's argument. I was just
Is it?
re-listening.
Okay.
I was just re-listening to his podcast he did with John Vallis on I think it's CT or something. It was a couple months ago that they put it out, and I was just re-listening to it because it's a great conversation. I mean, like just about every podcast with Preston Pishin is going to be a great conversation. But the big one would be like his point was like, once it gets to the point of like where those diminishing returns really start to kick in, to the point of where you're going to get better returns by just forking over your Bitcoin for some equity in some companies that are going to do really well, that makes sense. But that's not going to happen without number go up, or you would kind of need the rest of the world to devalue itself against Bitcoin relatively.
Well, there's a few things, right? One of them, I think it's nuanced, right? So one of them is number goes up and encourages people to want to sell it. The other thing is how to encourage number to go up for people to want to buy it and increasingly understand why they should own it. And that's things like what's happening in Canada, where they were freezing people's accounts, what we're seeing in different countries where they want to get away from the dollar and the control of the US dollar and the government's control over them through the US dollar and the debasement.
Or it can be in direct exchange. Like you could use like where you could actually use Bitcoin as a medium of exchange. Like you could distribute it in the sense of purchasing other goods, but that only makes sense to me for like the big ticket items, like buying a home. I could see people buying a home with Bitcoin. Like that's been happening.
Well, which country was it? I slipped my mind. Which country recently announced that? Is it Panama? I think it was Panama, where they said it's not a legal tender, but we're not going to charge for capital gains when you sell it or trade it or swap it or exchange it or any of that kind of stuff. And if that starts to happen globally, it's sort of like the difference here, by the way, so people understand, is like the medium of exchange legality of it is that you are required as a merchant to accept and receive Bitcoin, which I actually agree with what they're doing in Panama versus El Salvador. I don't think you should require that people accept that as a payment method because there's a lot of volatility in it. So I don't think it should be required for somebody to have to take on that potential risk, especially if they're a low margin business. What if you're a business that makes like 5-10% margin? And now you're taking payments in this thing, and it's like you're actually not making any money because you buy it. I mean, you take it and immediately it drops or something like that. I mean, that's kind of silly.
Well, and then there's also the technological like adoption curve of it too. Like there's some difficulty with like just making sure you understand that like you need to make sure that you're sending that Bitcoin to that address, and you know where that address is or who it's tied to. Because if you send your money to the wrong person, your strategy is betting on hoping that individual or company is going to be like reciprocal and like moral, and they're going to send it back, which I'm not necessarily a pessimist, but I don't trust people, and that would not be a great.
I just tweeted out yesterday that I'm probably the most successful pessimist you ever met. But everybody's called me a pessimist lately, which is the next topic I want to talk about, which is like the markets and stuff, because I'm just a realist, and it's always confused. It's always confused to be around like pessimism when you're talking realism, particularly with a bunch of people that are in hopiism, right? So. Yep, they're just drinking their hopium all day, right? Or smoking it. I don't know what they're doing. But we got a lot of friends that are just perma bulls. You know, Hodl admittedly says I'm a perma bull, even when he knows he should be bearish. He's like, I don't give a fuck. I'm bullish. Like he just sticks with the bullshit, and that's cool because he'll admittedly say it doesn't look great, but to the moon, man. Fuck it, because he does it like at least tongue in cheek and realizes that maybe I'm wrong in the short term, right? Short term price action bullshit. You and I both know. Last year when we sit on Clubhouse all the time, I used to run the digital gold rooms and the intelligent investor rooms, and we were lucky enough to have Preston come into the room, and I got to meet him and became friends with him, and we talked about interest rates and stuff, and like nobody was talking about this shit back in early 2021. We were in a bull market.
We were lapping it up like it was some sort of like Justin Bieber concert. Like
it was great. I mean, we were talking about stuff that I think made people feel very uncomfortable at the time. We're in the middle of a bear market, and they would come in and they would start like berating us, like, "What are you talking about? It's like dick and balls on a screen. You're talking about what might happen later, and it's all bullshit. It's all voodoo." And now that's all they do on Clubhouse, just so you know, if you haven't been on in a while, like, you go on once in a while, but like, that's all they're talking about. Like, these guys are just nonstop because why? We're in a bear market right now in the NASDAQ. We're about to enter a bear market with the S&P. None of these guys believed in the middle of a bull market that this could ever happen, ever, ever, ever again. I'm telling you. Because they said to me, they'll never be able to raise interest rates. It'll send us to a Great Depression. Do you not know where we are, Mr. Gould? Shit like this. And I'm like, you guys are fucking idiots. Like, of course we're going to have interest rates go up. Yeah. This is super cycle. It's going to the moon. We're going to 100,000. And people are betting and everybody was taking bets, remember? And it's like, people are like, we're going to hit 400,000 this year. I'm like, these guys are smoking crack, man.
To be fair, I made one of those stupid bets. So
I didn't. I did think we'd hit about 100,000. I think mine was like 100 or like right around that area.
Mine like in the middle of like, as we were running up through 50, it was just completely asinine.
Can I be honest? I actually thought we would never, I actually never thought we would get to 100,000, but I didn't want to be the guy in the room that was like, they call me Jay the Bear sometimes. And it's like, I didn't want to be the one guy that's like under 100 when everyone was giving their number. Remember John Ficori was taking them all in the spreadsheet. Yep. And so I think I might've said 110, but I was really thinking, I think 100 is a psychological number like 20 was back in 2017. And when we get closer and closer, there's going to be a front run on it. I didn't think it would be 69. I thought it'd be like in the high 80s, early 90s. And then it would revert and go back, and maybe it would bounce again. And then if it goes over it, I thought, who the hell knows what could happen? You know what I mean? Because maybe the number is psychological. Maybe they're thinking it's 300 or something. I don't know. Like whatever the majority is.
I was one of those completely asinine, euphoric individuals that said 300.
I didn't believe that because I've just watched just with stocks, like there's certain numbers that are like psychological numbers, like $10 a share is one, $20 a share is one, $100 a share, $1,000 a share. I remember when somebody first broke $1,000, I was like, holy shit, besides Berkshire, which was a long time ago, right? But when you started to see like, it's like, holy shit, right? So $1,000 was a big number. $1 trillion market cap was a big number. There's just like certain numbers that are big, $100 billion used to be a big number for market cap. Like when Facebook turned to $100 billion, it was like, holy cow, but everything's inflating to the moon. It is kind of crazy. But I just thought to myself, 100,000 is a very strong milestone. I think there's going to be a lot of profit taking at that number for hedge funds and others. I just, but then there was like all kinds of other stuff that was starting to happen towards the middle of the year last year, with, anyway, where are we at now, right? We are now at, as I just said, a bear market on tech stocks. Clearly, right? We're talking 50, 60% down. I mean, it's incredible.
I think the average is 70% down across like all like the darling tech stocks.
Yeah, because like their PEs are just stupid. And I was saying that last year, and everybody would tell me, friends, not Bitcoiners, like just friends like that are market participants. Well, you have to understand. It's like as soon as you start with you have to understand, or it's different this time or something. It's like, and they're trying to tell me how like with interest rates the way they are and this and that, and it's like I don't know, man. I think eventually this has to break down because it just. Let's just go off of logic for a second. I sold my company for 6 times earnings back in 2015, right? Which means if the company, for those that don't understand what that means, I'm sure not many, most people do, but I just want to explain. If you sell for 6 times your earnings are basically your profit. So I sold for $33 million. We had $5.5 million in earnings. We sold for 6 times. The company that bought us was a public company, and it was accretive to them because they were trading in the public markets for more than 6 times their earnings. I think it was like 11 or something like that, right? Yeah. Nexstar Broadcasting. Anyway, so when you sell for something like that, if the company doesn't grow or shrink and it just stays the same, right? And you bought the whole company for $33 million, in 6 years, you got your money back, right? There are companies that are publicly traded that if you were rich enough to pay $1 trillion for something like Tesla, right? Nobody can. But if you were, most people aren't looking at it this way. They're looking at fractional ownership. They're buying a share, and it's a greater fool theory. They're like, oh, it's just going to go up and I'll sell it to some other fool at a higher price. But no one's thinking, if I had all the money in the world, would I buy it for 200 times the profit? You'll never get your money back in your lifetime, right? It just doesn't even make any logical sense what's happening. And you could say because of the growth rate, but then you discount that, and I don't see how it's possible, right? So it's just we're just like completely detached from reality, Mike.
And then yeah, and then because like not to mention the average retail investor is not going to be buying to capture that like temporary delta, right? Like they're not gonna they're not gonna be. Most of them aren't like trying to like buy now and sell in the next couple weeks. Like most are like, oh, it's on its way up and it's going to continue that way forever. And I'm just going to invest in this company now, and then I'm going to make like $1 billion by the time I retire. And it's like that's not how the macro market works, like whatsoever.
So where do you
Uh,
think we're going? What do you think's happening now? Do you think that we're hitting a bottom? Do you think that we go even further? Some people think that this can go 30, 40% down in the S&P. Because really what's happened is the first thing that gets sold off are high multiple companies, multiples of earnings we're talking about, the 200Xs, the 50Xs, the whatever, the 90Xs, right? Like that starts to come down, right? The growth stocks, right? The Facebook is, I think it was like between 13, 14 times, which is not totally unreasonable for a company that's growing really rapidly. You know,
yeah, but they're already also huge.
they're huge, right? So like it's the law of large numbers. How much bigger can they possibly get? They can't get any more users, right? So they have to be able to monetize those users more often or in some other particular way. We talked about this before the call, and we'll talk about this in a minute too. It's about time spent for internet companies because they monetize through advertising. So
Yeah.
first order is go get all the people to use your product and get addicted to it, which is Larry Page calls this the toothbrush test. If they're using your product at least 2 times a day, habitually like a toothbrush, Google's interested in potentially acquiring that kind of business. And these companies are using data science and everything else to try to get you sucked in and addicted to their products.
Yeah.
So then they try to get you in longer and longer and longer and spend more time. And then they monetize you in various different ways. As they say, you are the product, in these services, right? That's not you are the product, right?
Yep.
So, those types of businesses, they get contracted first, right? So you see some money leaving the market, but you also see money rotating into the lower valued companies, which are the value companies a lot of times, right? And those PEs are going to start to rise as that goes up and the earnings stay the same. But at a certain point, if the market continues to sell off, that stuff sells off too, and more money comes out of the market, right? So then the market just falls even further. I think that's likely to happen because of the, yeah.
I agree. I think what we witnessed on Friday is, in my opinion, the beginning of the bear market. But the problem is that now this is where it gets really interesting in my opinion, because I don't think we're done going. I don't think we've gone as low as we're gonna go. Um, but from what I've been learning, as far as just like, because I got into Bitcoin in 17, and that was really when I like was also learning about investment strategy and technical analysis and all that stuff. But from what I've observed since then is that when these bear markets kick off, there's that first initial sell-off scare, right? And then there's going to be a reappreciation as people kind of like people think the bottom's in, and they're like, oh, okay, it's euphoric, it's going back up, and then they go up to retest those values, and then that's where like, because the first sell-off is when the smart money's getting out, typically like institutions and then like bigger like hedge funds and players like that, because they'll have like some sort of metric, like some sort of moving average has crossed another, and they're like, okay, this is our like checklist as far as like what we need to do to get out of the market. Once we get back up to those levels is typically where it's going to be. That's where you're going to get the confirmation as far as like which way price action is going. So I think we're setting up now to begin what's called a relief rally going into the summer. And this is where I know Jeff Ross agrees with my position on this, because he's he's really started talking about this lately since his position changed.
Yeah.
I've been expecting, and like, I just want to reiterate, because I've been very proud of myself for the last like 6 to 9 months. I've been expecting the recession to be full blown, like admitted Q4 of 23. So Q4 of this year, or I'm sorry, Q4 of 22. I keep saying 23 and I don't know why I keep saying that. Q4 of 22 is what I believe is going to be like where everybody finally, like, it's full blown accepted across the market that we're in a recession at the minimum. But what I'm expecting is going into the summer, we're going to get the relief rally. Everybody's going to return like to euphoric. Like we even saw it yesterday, because it's Tuesday. Yeah, it's Tuesday. So yesterday we saw like a
3 o'clock,
a 0.5% kind of like rebound in the S&P, and everyone's talking. It's like, oh, huge reversal. Like, no. That's $50 on the S&P, and the S&P is at like what 4150 right now.
Right.
Like that's asinine. Like to call that like a massive reversal is just beyond logic. But then so like going forward, I think the summer is going to be kind of like euphoric and denial for the Bulls, and then coming into the harvest season, I think is where things get like that's where the bad stuff really starts to set in for people, because so one of my buddies, Texas Slim, and my buddy on Twitter, Hodl Magoo, we've all been talking about how like the things that have been happening since summer. So like as far as like China and Russia stopping their exports of fertilizers, oil and gas with the conundrum over in Russia, well in Ukraine, but with Russia, and then also the fact that Ukraine is kind of like the breadbasket, particularly for the Middle East and I believe Africa, if not Central Asia as well. When you have like these kind of like large macro machinations that are coming out to the point of like people won't realize that there isn't a whole lot of food until like inventories are diminished, shipping continues to get constrained. And then also with the sense of like there's layoffs coming. Like
Yep.
immediately after
For
earnings,
sure.
Amazon said that they are overemployed. And I believe that there is quite a few other relatively big entities that have also stated that they are overemployed right now. So like when you get like big macro developments like this, not only does it take time for them to actually set in, but then
Yeah.
it also takes time for the market to like kind of
Respond.
realize it. Yeah.
Yeah, there are several factors that I believe were causing trepidation and uncertainty in the markets last year, mid-year going into the end of the year, right? And
Yeah.
just let me just list some of those things off that I had written some notes here that I wrote down because I'm going on Preston's show next Wednesday. I'm going to talk about this with him and Joe Colasarelli and others.
Okay.
Mid to late last year, right? I thought the inflation was starting to become a concern for people in the market participants. Maybe not all of us, but like we're not all thinking that, right? But I
Probably
think
around
like the
like what, like August, September.
yeah, I think it was like starting to like I think people were starting to recognize that this could become a concern, and then the Fed
Yeah.
started to talk the market down, and the first thing they do is reduce the balance sheet that they were talking about, right? And I was saying they're going to raise rates. Joe Carlosarli actually correctly pointed out to me that the first thing they do, the first step is usually is what is usually that, right? Then and then they go to then they go to reducing the rates, right? Which is
Yeah.
what happened, right? He was
Yeah.
absolutely correct on that. Then they started signaling the rate hikes, right? Then there was the COVID lockdowns from the year before. Now more recently, there's more COVID lockdowns, right? So that seems to be something that just keeps go back and forth throughout the globe, right?
Talking about Shanghai or
Yes, correct. More recently. That's more recently, right?
yeah.
Supply chain shocks as a result of the previous COVID lockdowns, right? So you have the COVID lockdown, supply chain shocks, inflation. Except there was another thing that happened in the beginning of the year that I just think a lot of people did not correctly assess, which was the Ukraine-Russian war. I think that's likely creating a lot of uncertainty and trepidation in the markets right now for those that are like, fund managers and stuff. I think they're looking at this like, okay, this could, where we thought we had inflation curves, right, and starting to decelerate, it may just go like this. So rather than it kind of going like this and then down, it's more like, like that's the risk, right? So if that happens, what's the Fed going to do?
So Jay, real quick too, on that point, it's also important to like identify, because like Bloomberg was doing this last week where like, so if inflation comes in at 6% last month and then it comes in at 2% this month, that doesn't mean inflation is going down because inflation is compounding.
Yeah.
That means it's continuing to get worse. So like when like in your situation, like next month it could go 6.26, and like that's bad. Like that's yeah. So I just wanted to like keep going.
Yeah,
Man.
totally. And it's like, and then there's obviously, it's just like at the end of the day, it's all about growth. It's all about GDP, right? And it's all about employment. Yeah. Like the Fed's number one mandate, they don't give a shit about the stock market, right? But they kind of do. It's like it's talking out two sides of their mouth. They have to, because if these companies drop precipitously, right, in their market caps and their share price, all these executives and the board governance and all these folks that are making the decisions for these companies, the first thing they're going to do is they're going to start laying people off because they prune that first to try to kind of fudge the numbers, so to speak. Like, how do we get back to more profitability? How do we increase? Well, the easiest thing to do is the variable expense is lay people off, right?
Yeah,
and
you call the people that are less necessary.
Right? Yes. Right. And so that becomes a death spiral in the economy, right? So I think that's what the Fed is
That affects
probably.
real estate, or it can
Well, yeah,
affect.
well, interest rates are affecting real estate. And I think, interestingly, apparently, like, I don't know what's happening with that. Like, I'm trying to wrap my head around this one. Like, I was saying to people, if you have $100,000 mortgage, right? The mortgage is $100,000. I don't have the numbers in front of me, but you can get out a mortgage calculator and kind of verify these numbers. They're close. $100,000 mortgage at 3.5% interest is somewhere around like $460 a month, I think, somewhere in that range, right?
Okay.
So if the interest rate goes from 3.5% to 7% to get the same monthly payment, you'd have to drop the underlying price of the mortgage, right? You could only mortgage at 7%, like, I think like 70,000 instead of 100,000 to get around the same monthly payment. But what's
Okay.
happening is interest rates are rising right now. And from what I can see, it's anecdotal. I'm not looking at national data or anything like that, but I'm just saying here on the Jersey Shore and talking to people that are more recently closing on mortgages, the house is going up. The interest rates are the houses are staying the same in the same price, not really rising right now. They're not going down though. And they're paying more per month because they're paying a higher interest rate. And I'm like, why isn't it going down? And my understanding from talking to my friends that are realtors, they're conflicted, obviously, but also people that have just recently purchased some stuff. They're just saying like, there's not a lot of inventory. So if the buyers are staying strong and the demand isn't weakening that much, the prices, I think that breaks eventually, but it hasn't broken yet, at least on the Jersey Shore, from my understanding.
Yeah,
So I wonder
and
where that's going to go.
yeah, I am as far as like outlook for any sort of industry, real estate's going to be my weakest one. So I don't want to
I don't
talk
know
too much
shit. I
about
just know that provides a lot of most people's net worth in the country, right? Number one,
yeah,
and a lot of jobs. Like there's a whole
which
ecosystem around real estate, right? The contractors servicing, the builders, all the supplies, shipping, et cetera, et cetera, et cetera. It's just huge. It's a gigantic part of our industry, right?
which
So
which which that dynamic contributes to the whole the fact that prices aren't coming down and they aren't necessarily going up yet either,
yeah,
because we have like an entire demographic group, my group, the millennials, that grew up with everybody and their mother saying that real estate is a great investment. So you're commoditizing the home,
yeah,
right? And that's precisely the problem that China is in right now, because they're both of our countries are in a demographic situation to where we have a huge flood of retirees about to come onto the market. And
yeah,
then once you
crazy.
get to the like we have like how like I would love to see the statistics on how many millennials, like particularly male millennials, cannot afford to get a home, and what that does psychologically to like birth rates and everything. Because if you're a middle-aged male who can't even afford to have his own place to live, and it's also a place to live that's probably not big enough to house a family beyond two people. Um, what does that do to your psychology, as far as like things as simple as job, college, dating? Like if you're nihilistic to the point of where you don't see a future of where you can facilitate a family, why would you even go about dating or trying to find like the love of your life to have kids or anything if you're going to be stuck in a cardboard box essentially, right? And then there's the fact of how that affects like going further down the psychology side of it, like how that affects like masculinity or something like that, because like then you can get into like health and all that stuff, and you and I talk about that
Now you're
like
talking like American Idol. So masculinity,
yeah,
femininity. He
well, yeah,
says
and then
Republicans are masculine and Democrats are feminine.
but the big point that I wanted to get at was that it really, like, you can start to see how like the market itself can kind of hamper some of like the the underlying drivers of like what a market is, right?
Mm-hmm.
Because like if you're not confident in yourself, or you don't know what you want to do, like the market is going to be relatively wobbly. And then you also talk about going back to like the food and like the food crisis that's coming, and the
Yep.
public health pandemic that we have in the United States right now with resort of the chronic metabolic syndromes of type 2 diabetes, obesity, heart disease, all this stuff, and the overuse of plastics in our life, and how the overuse of plastics plus the chronic metabolic syndromes can hamper testosterone levels, and like that affects like all those demographics. Like this is why I like talking about all this shit, because like you cannot separate all of it from each other. Like it's all playing a very dynamic and constantly moving role. But I took us completely away from the topic at hand.
Well, no, it may be a little bit off topic, but you kind of are. an expert in that area because you went to college for exercise and movement sciences and stuff. So I think you this is a topic of this is a strong topic for
Yeah.
you, right? In terms of how what your knowledge and your experiences are. So happy to talk about that stuff. I mean, it's really interesting.
Okay. Yeah. Because like with regards to handling those kinds of challenges, and like because like you have to consider like with regards to and this goes back to real estate, stock market, equities, bonds, whatever, because talking about how weighed down the US is specifically with chronic metabolic syndrome or chronic metabolic diseases, like again type 2 diabetes,
Yep.
obesity, chronic cardiovascular disease, all that stuff. That's also weighing down the health sector as far
Yeah.
as like so like there's a book. I think I plugged this into like our attempt at recording the last time. But the author is Stephen Brill, and the title of the book is Tailspin, and he talks about a lot of these problems that the U.S. has been going through for the last 50 years, leading back to 71.
Mm-hmm.
And one of those big problems is like I believe he said in the book from like the 90s up into like 2011 or 2017, somewhere around that area. I probably fudged up the time frame a little bit, but healthcare premiums went up by nearly 500%.
It's insane.
Yeah. And so when you consider how much that's weighing down on the average American, like as far as like monthly costs on top of rent, which is already astronomical. And then you talk about like all the other inflationary aspects with the cost of food and all that.
Yeah.
Like we can't not afford to talk about the health problem, because the health problem is like producing a negative.
I will tell you, I was just on Clubhouse last night, and Tina was saying how some of these guys, he thinks that value investors live longer. It's so funny, right? He's like, if you look at guys like Warren Buffett and Charlie Munger and a variety of others, they live into their 90s and some above 100. And he thinks it's because they have lower stresses and cortisol levels. And all of a sudden I was like, I don't think it's that. I think like I grew up in Ocean County, New Jersey, and it's a very blue collar area. And I watched like my dad and his friends and all these older guys, and now they're 60s and 70s and stuff. And they drink a lot of alcohol, a lot of these folks, or they don't treat their bodies well. They don't work out. They've never gone to the gym. I've been going to the gym since I was in middle school. Like I always go to the gym. I have a gym in my basement now and stuff. Like these guys, they don't do that. And I think the reason for that is I hear the things they say, and they say things like, oh, I'm not going to be around that long. And they've been saying this since they were like late 40s, right? Now it's 20 years later. And it's like, well, you're still around and you're just really unhealthy, right? And it's because it's a compound effect. Just like you'd have compound effect with habits, right? As it relates to your wealth. Obviously, it's the same thing for your health. And they just have one foot in the grave all the time, people that don't have a lot of money, because they feel they feel like abandoned. They feel like they have no chance. Like, why do I want to live longer? Who the hell wants to live 90, 40 fucking more years like this? Fuck this shit. Like, I really hear that a lot. Like my biological dad, I'll never forget this story, right? We went, when I used to get picked up every other weekend here or there, you know, go down to see him. And we used to go to Wawa, which is like a grocery store around here, convenience store in New Jersey. Yeah. And I'll never forget this, because I must have been like 11 or something like that. And I open up the door, and I open the door for this old man coming out. My dad's standing behind me. And when the guy goes by, he was like, wearing a cane. And he's like, thank you, Sonny. You know, one of these things, you know. And my dad walks by, he goes, if I ever get like that, you got to shoot me. So like just a couple years ago, I happened to be going to we were going to get some bait to go fishing together. I open up the door and he walks by. I go, just so you know, you're that old guy. When I was a kid, you said he goes, no, I changed my mind. I don't want you to kill me. Right. So it's like, you know, before you know it, tomorrow comes. Right. And now you're unhealthy, and the healthcare system is now having you to go to the doctor constantly and stuff, and it's increasing costs and everything like that. And I think it's an epidemic. It's a problem. And I think it relates to money. I think it's mostly about money. And they feel like they just have no chance.
Well, and you can tie this back to Bitcoin and the Cantillon effect too, because like doctors nowadays, because of trying to avoid malpractice suit, from my understanding, is that they're very more closely related to a technician than an actual like diagnostic doctor, because they don't want to go outside of their parameters to where they can be sued.
Yes.
So you literally have to follow like a step-by-step process. And that at the same time, from my understanding again, is that a large portion of America's hospitals are privately owned, which means that they're profit driven, which means that like as far as whatever partnerships they might have with big pharma, or whatever their doctors like have, like as far as like representatives for big pharma, they're going to be incentivized to push out these big pharma like products. And those products are not cures. Like they don't solve problems. Those products, they treat symptoms. which
100%,
which
dude.
is a which is a rent seeking behavior. You're like,
You
if you're
you
not,
know I was diagnosed with Lyme, but it took me 2 years to find my diagnosis because nobody wanted to symptomatically diagnose me. And since the CDC guidelines on Lyme disease testing haven't been updated since 1994, I wasn't showing up positive. I was one of the 50% of the people that get a Lyme disease test. They show up negative, and and most doctors, they'll be like, well, he's probably Lyme, but they call it the great imitator of this particular disease, right? They're like, it could be MS, it could be. So I got to send him over to a neurologist. I got to send you over to a cardiologist. I got to send you over to a pulmonologist, an allergist. I went to all these different doctors, every ologist you could imagine I've been to, right? And why? To your point, they don't want malpractice. So if they give me like doxycycline initially and I have an adverse reaction to it, they'll be like, he didn't have a positive test, and they don't want to deal with that. So it's easier for them to just send you off to another place and like, well, maybe he's got something else. It could be that, but I don't want to give him those antibiotics because you never know, right? Like
they don't
what
want
if
to take a
something,
risk.
they don't want to take a risk. So I go 2 years. Now I have chronic Lyme. It's really difficult to get rid of chronic Lyme, right? If you can at all. And I'm going through all different types of tests. And I'm going to like alternative medicine. And now forget about all of I did over a year, almost a year, I should say, of antibiotics. And it was causing ligament issues, intestinal issues, all kinds of other
Antibiotics
problems.
will destroy, like it's
Rips
in
you
the
apart.
name, like they're antibiotic, and like your cells in your body are a biotic. So like,
It
yeah,
ripped me apart, man. And it's
yeah,
like, and I probably start doing podcasts. I've talked to a couple of the doctors and stuff offline, to bring them on the show to talk about this, to expose what's happening, mostly to educate people, because there's millions of people that have Lyme disease that don't even know they have it. Their doctors tell them they have something else. They're being treated for something entirely different because they haven't tested positive, and they're just going down different rabbit holes. Now, from a healthcare perspective, to your point, they have no incentive at the insurance companies and all these other practices to quickly give you a doxycycline 14-day cycle and you're done, right? If you
yeah,
come up negative, it's like, okay, now the money printer goes on for them because now you go through all these tests and they make money on all this shit. They're not making money. Everybody's making money.
yep. And then
Sad.
so, kind of to like wheel back a little bit, because you brought up Buffett and Munger. I don't
Munger.
even know I don't know how to correctly pronounce his name. But did you want to talk about like their recent talking about Bitcoin
Mhm.
and the market at all?
Sure. Yeah.
Because so
They
I had
just
a
did the
really
shareholder meeting just the other day for everybody to understand the timing of this. It's May 3rd. So last weekend, I think it was Saturday, they had their annual shareholder meeting. And once again, they had all these negative comments towards Bitcoin, as they typically do. They didn't call it rat poison this time, but
close
they
though.
actually said like, oh, Bitcoin's bad. I don't have the exact quote. Bitcoin's bad. Bad Bitcoin, right? Bitcoin's bad because it would dissemble and kill the Federal Reserve. And we need the Federal Reserve. It's like, no, you need the Federal Reserve. To your point, the Cantillon effect, they need it because they benefit because they're closest to the money printer. You, me, everybody else. Actually, I probably benefit more so than other people, but most people don't benefit at all. It's actually hurting everybody else when this crap is going on, right? So
Yeah.
your comments, go ahead.
And so I had a really great spaces conversation with some guys that are more leaning on the side of traders than investors. But one of the guys in there, Matt, I think his Twitter handle is Myth Coons, if anybody wants to check him out. But I think he brought up a point that I haven't been able to confirm, and you might know, so you might be able to correct me on this. But so in 2007, leading up to the global financial crisis in 2008, right? Like this was before anybody knew that the real estate Lehman Brothers situation was going to pop off or anything like that. In the summer of 2007, from my understanding, the market was relatively toppy, like it is right now. And Berkshire Hathaway did something interesting where at the top of the market, they increased their exposure to energy. And we know what happened following, right, into 2008, 2008 global financial crisis and all that stuff. But they, from my understanding, is they did it late spring, early summer, loading up on energy at the top of the market. They just did that. They just quadrupled their position in Chevron.
Mhm.
And
And railroads.
huh?
And railroads. Anthony Scaramucci just put out a tweet the other day. He's
Yeah.
like, he's like, Buffett's buying railroads and energy companies. He's like, what does he think this is, the 1800s?
And then, but he also did
Wrong
something.
century.
They also did something very interesting that is still very much along the line of like some mistakes that, in my opinion, that they have made. Because one of the mistakes that they made is they didn't get into Amazon or Apple until those markets had already relatively topped out.
Mm-hmm.
They just took up a pretty relatively sizable position in Activision Blizzard, which is a large gaming company that gamers are going to know because they own the rights to Call of Duty. and Microsoft just decided, just like did their whole shareholders voting process, and they unanimously voted like 98% in favor for acquiring Activision. So, in my opinion, Berkshire is getting extremely exposed to very topped out markets in a largely topped out macro environment that I think is gonna is like if they don't back out this summer, they're gonna get flipping crushed. On top of their position as far as like being against Bitcoin and not liking it because A, they don't understand technology clearly,
Yeah.
but B, like you said, they are massively incentivized to try and prop up and talk up and support the Federal Reserve. And
Let me read exactly what he said. I just Googled it when you were saying this. In my life, this is Charlie, right? In my life, I try to avoid things that are stupid and evil and make me look bad in comparison to someone else. And Bitcoin does all three. In the first place, it's stupid because it's very likely to go to zero. Doesn't understand it. And it's evil because it undermines the Federal Reserve System and national currency system, which we desperately need to maintain its integrity and government control, and so on.
He's scared.
Yeah.
He's scared of it.
But listen what he's saying. We want that government control. Bitcoiners do not want that government. Why does he want that? Because he benefits from it.
Yeah. And then there's another point too that I wanted to make because so Larry Fink said this. He had a video from like what looked like the early 2000s or something like that, or maybe even the later, like after 2010. I have no idea what the time frame was, but he was in an interview. He said that he made the claim that he believed that markets love totalitarian governments. I don't think that markets love totalitarian governments because markets in general are like they're going to love wherever money is treated best and wherever innovation is happening and wherever innovation is allowed to prosper, right? Because markets are going to want to put their money where they're going to be able to get the biggest profit out of it. So I believe that fund managers love totalitarian governments because it's easy for them to predict where those markets are going to be going, which means that those like totalitarian governments or like fund managers are going to like governments like China, which from everything that Munger has said over the last couple of years, Munger is a huge fan of China. And I think that that's something that we should all be significantly concerned with.
Buffett also said, if you told me you could own all the Bitcoin in the world and you'd offered it to me for $25, I wouldn't take it because what would I do with it? We could just put up the Berkshire coin, the Buffett coin, Berkshire money. But in the end, this is money. And there's no reason in the world why the United States currency, which people trust more, this is the only thing that's money, is the US currency, Buffett says. And what he doesn't understand is that they may trust it because they don't understand anything else, but increasingly as they understand the scarcity and all the characters and qualities and characteristics of Bitcoin that make it what it is, which is the better money, they just haven't done the research on it, in my opinion. And it's really a shame because I think for most people that are investors, we've all studied Buffett. We all respect what he's been able to do in his career. I just wish he would take the time to really understand, he should probably listen to Michael Saylor and, what's the NIDIG? Yeah, Ross Stevens, right? That was a great interview. And like maybe if he can understand that, listen to some of the talking points, read the bullish case for Bitcoin, I think he would understand what everybody else is seeing that he's not seeing.
Yeah, like I mean, the Ross Stevens thing with the melting ice cube, because like Berkshire has what, like 140 billion in cash and cash equivalents, and those cash equivalents haven't yielded crap as far as interest goes, I guess, especially in comparison to like what inflation has done the last couple of years.
Yeah.
So like, I would bet that cash position is probably what, down like 16.
People don't understand this, dude. I'm telling you, they don't understand the melting ice cube. The best way to describe it to somebody who's in their 60s or 70s is it's very simple. Okay, if you bought your house in 1980 for $100,000 and today it's worth $500,000, let's just pause for 1 second. Let's assume you decided, nope, I think the price of these houses are a little overvalued at 100,000. I'm going to leave that in a savings account. Okay.
Yeah.
And 40 years later, you decide, you know what? It never dropped. Maybe I'll buy those houses now. Okay. You have 100 grand. Now it's 500,000. You've been left behind. You must own assets that are moving with inflation and growth, or you're left behind. If you have you have $1 in 100 years, it's basically buying you what a penny used to buy 100 years ago. If you kept the penny, what's a penny worth today? You can't get anything for a penny today, right? So that's what people don't understand. They have to just understand that, and that's what Bitcoin solved because they're not making any more of it. So the value of it goes up over time as increasing demand goes into it. But yeah, people don't get it. Mike,
Yeah.
I think we're going to wrap it up. We're at an hour here. I love doing this with you. We're going to have to do this again. But why don't you tell everybody where they can find you and, if you have anything going on, any you want to share?
Yeah. You can find me on Twitter. The Twitter handle is, this is going to sound really ostentatious, but there's a lot of Mikes and a lot of Hobarts that I did not expect out there. My Twitter handle is so THEE, and then Mike Hobart. That's HOBART. A lot of people try to put an E in there for whatever reason. It's phonetically pronounced exactly how it's spelled. You can find me on Medium too. Medium should be just Mike Hobart. I believe that's correct. But so like the reason I plugged the Medium is that I've been working on an article for the last couple of months that I'm super excited to finish. It's going to be excessively long. Like it's really long. Like it's 14 pages and like 6,000 words right now. But I promise it's going to be worth everybody's while to check out. It's like I'm comparing the economics of like natural ecosystems to like the economics of a less natural, more human, just like markets in general. So that's going to be a pretty deep nerd dive for anybody that's interested in that. And then that's really it. It's just Twitter and Medium because I like to write.
I would want to jump in and say I think people should go Google you and then type in Bitcoin Magazine. You've written a lot of articles for Bitcoin Magazine. I think they're great articles. I think people should just read those articles as well.
Yeah, thank you, because I can't believe I forgot about my articles on Bitcoin.
You've done like 30 articles. I counted them one day. I was like, man, you wrote a lot of articles in the last year. Written a lot.
I think I did the majority of those in the last like 4 to 6 months.
Yeah, you've done a great job. Yeah,
thank you,
Mike.
Yeah, those are the big three.
Thanks for coming on, brother. We're going to do this again. I really enjoy speaking with you. Obviously, we've spent countless hours talking on Clubhouse, got to know you there, and really enjoy the friendship and the conversation. So thanks for coming on.
Thanks, man. I appreciate the invite. Like, I'm definitely looking forward to the next one.
All right. Take it easy.